When technology usually corrects, that means that the rest of the market is going to correct. But at the same time, we've got an opposite signal, and that comes from small caps.
Welcome back, Bruno.
Good morning, Kias.
Now, a month ago you were here and you were talking about a correction in the US equities. You also mentioned that emerging markets are outperforming. Is this still the same situation?
Well, it's not. It's a rather confusing situation if we make it short. But let's first look at the situation in India. What we've got is on the black line the relative strength of India versus the S&P, and we see that during the month of August it was rising. Recently, in the last 4 or 5 days, it's coming down, and it's also breaking a rising trend support. So now it is kind of in a correction. We see that the same thing for China. Relative strength was rising, now coming down and breaking also here with a big gap the rising trend support, and also further for the market which was outperforming the others with this rising orange line. Brazil was outperforming over emerging market and also the S&P, of course, and now it's also pausing, to say the least, and it's breaking the uptrend. So their momentum is coming down, so we've got now a correction going on for all emerging markets.
Now, are these concerns shared and reflected in gold?
They should. It's a little bit a different situation. Let's look at gold. In fact, gold rose during the month of July and August when the S&P was going a bit sideways. As the S&P rebounded in September, gold came down from 1360 to back to 1290. Now it is a key support area. If it rebounds, that means that fear will be back, but it has still to do so.
So how has the US interest rate behaved over the summer?
Well, it was in a nice correlation with the S&P. When the S&P was rising in July, here beginning of July, usually it means that interest rates are rising. Then it made a pause, and here we see the black line was about flat, and the interest rate came down and even made a new low. But in early September, interest rates rose again, and again that was the occasion for the S&P to rise. Now we are back toward resistance, about 230. There it could stall a little bit and mean that if interest rates are coming down, that usually correlates with a kind of a pause in the S&P.
Now, Europe and Japan, they seem to be in an uptrend. Will it last?
Well, it's surprising, isn't it? What we've got for Europe is clearly the relative strength versus the S&P was a big downtrend, and now it is broken. So there is a rebound of this relative strength. At the same time, we see that Euro stocks broke the downtrend here on the price as well, making higher highs and higher lows. Despite the fact that recently it's a little bit a bearish divergence, that means the momentum is coming down while prices are marginally higher. But the confusing thing is that usually the outperformance of Europe doesn't occur while the S&P is correcting, because Euro stocks is more risky than the US, and that means that if there is a correction in the US, Euro stocks would correct more. So basically the relative strength rebound just say there will be no correction in the US.
So how's it looking over with Japan?
And Japan gives about the same kind of signal. Relative strength is rising, the yen is coming down. That allows the Nikkei to rebound, even make higher highs above 20,300. As long as it is above 20,300, here this resistance trend line here that we've got in June and May, there is no correction going on. Only if it breaks back down, then it could accompany a correction.
Now, is it smooth sailing for the S&P 500?
Well, it should, but it isn't. If we look at the weekly charts, here we see that 2508, the new high, is barely above 2490, the previous high in July. Momentum is coming down a little bit, not rising too much, it's overbought. And volatility is rather low than high. That means it's close to the 10%. It keeps the risk that this high here is going to be met subsequently by a return to the 2417 level at least.
So are we getting any clear signals here?
If we look at the daily charts, we see that the only clear signal that we get is that VIX was too low, around 10%. there was a downtrend and now it seems to be broken a little bit. So it has induced also a correction because it's started to break this rising uptrend. But if we see 2508 and 2496, it's almost like the seller were on strike. No, it's no downside movement really. And already the oscillator is oversold. So here we are in a conundrum, waiting for something to happen.
So why is this situation so confusing?
It's confusing because of two markets are going opposite directions. First of all, the Nasdaq. Nasdaq has been in the trailing range. Recently, in mid-September, moving from the top of the range to now the bottom of the range. When technology usually corrects, that means that the rest of the market is going to correct. But at the same time, we've got an opposite signal, and that comes from small caps. Small caps are making higher highs compared to the previous high in July. Relative strength is rising. Small caps don't make new highs while the large cap are entering a correction. They are usually more risky. That means they are already in a correction when large cap enter the correction. So we've got here totally opposite signals. With the breadth here saying no problem, everything is fine, the bull market should continue, and even though technology on the Nasdaq is saying here we are in a correction. So we need to wait, especially because we are in September, at the end of September, and usually correction can occur up to mid-October at least, or maybe late October like we had last year.
Well, Bruno, it was good to have you back as always. It's a pleasure.
You're very welcome.
And thank you at home for watching. Don't forget to click and subscribe to catch all the latest tips with Bruno and myself. Goodbye for now.